Hey traders, in the dynamic world of trading, capturing the perfect entry point is the same as finding a needle in a haystack. Traders often seek strategies that capitalize on temporary reversals within larger trends, known as pullbacks. Harnessing the potential of pullbacks requires a keen understanding of market dynamics and the right set of tools. Enter our trio of indicators: the pullback factor, the two-legged pullback, and the volume force pro. Individually, each indicator offers a unique insight into market sentiment and price action, but when combined, they form a potent arsenal for identifying lucrative pullback opportunities. Join me as we delve into the intricacies of pullback trading and unveil the synergy of these three indicators. But before we begin, I'd like to ask you for a quick favor and show your support for the video by hitting the like button, as well as subscribe to stay up to date with future videos. Thanks. Firstly, let's start with the indicator setup and rules for entry and exit. On the chart, I've selected the US dollar against the Canadian dollar in the hourly time frame. Under the Indicators tab, which is located in the top toolbar, I'm going to add the indicators for our pullback trading strategy. Now that we've attached the trio of indicators, we'll need to make some adjustments to ensure that we get the most out of our trading strategy. Firstly, for the pullback factor arrows, we are going to select under the Style tab and then unselect the following boxes to clean up our charts. Then, under the cog icon for the two-legged pullback indicator, I'm going to scroll down and unselect the following box. After we've made these adjustments for our two main chart indicators, we are going to go to our Volume Force Pro panel. For the Volume Force Pro panel, I will increase the line thickness or width from 3 to 4. With these different changes complete, we can now cover the rules for entering a buy or long trade. For a valid buy trade, firstly we are waiting for the pullback factor arrows to give us a buy alert. You will notice from the chart that we recently started trending up, with the pair forming higher highs and higher lows. After this, we receive another buy alert from the two-legged pullback indicator, which will be marked like this. Once we get the second alert, we need to take a closer look at the Volume Force Pro panel. For the Volume Force Pro panel, the histogram needs to be above the zero line and also above the average line. Once all of these criteria are in place, I will enter my buy trade. For this buy trade, I will place my stop loss below the recent swing and aim for double the return. For this example, my stop loss will be set at 55 pips, which is a couple of points below the swing, and my take target will be set at 110 pips. By combining the pullback factor, two-legged pullback, and Volume Force Pro indicators, we gain a holistic view of market momentum and capitalize on lucrative opportunities. Through strategic adjustments and adherence to both entry and exit rules, we can navigate the complexities of pullbacks with confidence. Next, let's explore the other side of the spectrum and look at the rules for entering a sell or short trade. For this example, I've selected Tesla, ticker symbol TSLA, in the hourly time frame. For a valid sell trade, firstly we are waiting for the pullback factor arrows to identify a sell alert. We can observe from the chart that the stock has entered a downtrend, forming lower lows and lower highs. Pullbacks offer a fantastic opportunity for us to enter this existing downtrend. Now, after the first alert, we are waiting for the two-legged pullback indicator to identify another sell trade. Once we get the second sell alert, we need to take a closer look at volume on the Volume Force Pro panel. From the Volume Force Pro panel, we need a histogram below zero and also below the average line. Once all of these criteria are in place, I will enter my sell trade. For the sell trade example, I will place my stop loss a couple of points above the recent swing and aim for double the return. What this means is for every 1% of the account that I risk, I aim to make double the return. Navigating the world of pullbacks demands a disciplined approach to both the technical analysis side and risk management. By placing strategic stop loss and take profit targets, this comprehensive strategy empowers us to mitigate risk and optimize returns. Next, let's explore another trading example. For this example, I've selected the Australian dollar against the US dollar in the hourly time frame. From the chart, we can see that we had a major sell-off in the pair before entering a short consolidation period. This consolidation period is also known as a pullback. After this pullback, we can see that the pullback factor arrows have given us a sell alert. After we receive the sell alert, we are waiting for another sell confirmation from the two-legged pullback indicator. However, this time we can see that we don't yet have enough momentum for the downtrend to continue. This can be observed because the volume force pro histogram is still above the zero line. All we need to do is simply wait for the histograms to go below zero and also below the average line. Once this has happened, we can enter our sell trade. For the sell trade, I will place my stop loss a couple of points above the recent swing at 41 pips and aim for double the return at 82 pips. This gives me a risk to reward ratio of 1 to 2. We can avoid getting stuck in sideways markets by waiting for our volume force pro to detect enough momentum for the trend to play out. Now that we have covered a couple of day trading examples, let's shift our focus towards scalping. For this example, I've selected the euro against the US dollar in the 5-minute time frame. What you will notice from the chart is that the shorter time frames, we will often have multiple signals as the market is moving. This is why it's important that we need to follow the exact rules set out in the strategy. That said, from the chart, we can see that we received a buy alert from the pullback factor indicator after price was rejected away from this demand zone. Now, after this, we are waiting for a two-legged pullback confirmation that the new trend is starting. Lastly, we need to check the volume force pro. We need to have a histogram above zero and also above the average line. Once these criteria are in place, I will enter my scalp trade. For the scalping example, I will place my stop loss below the recent swing at 6.5 pips and aim for double the return at 13 pips. Our pullback strategy isn't limited to any specific time frame or instrument. You just need to follow the rules for entry and risk management. Next, let's explore another scalping example. However, before moving forward, if you want to learn more about the specific indicators featured in the strategy, we've created video guides for each of them that are available on our YouTube channel. For our next example, I've selected the US dollar against the Japanese yen in the 15-minute time frame. From the chart, we can observe a major sell-off in the pair before entering a period of consolidation or pullback. The first initial sell-off was captured by our pullback factor indicator, so now we are waiting for a second confirmation from the two-legged pullback. Once we receive the second sell alert, we can take a closer look at the volume force pro to ensure we have enough momentum for the downtrend to continue. For this example, we had to wait another candle before we had enough momentum for all the criteria to be met. Now, once this candle has closed, I will enter my sell trade. For the sell trade, I will place my stop loss above the recent swing and aim for double the return. For this example, my stop loss will be set at 52 pips and my take target will be set at 104 pips. By combining multiple indicators and cross-checking our analysis, we are able to enter another winning trade. For our last trade example, let's focus on trading a cryptocurrency. For this example, I've selected Ethereum against the US dollar in the 5-minute time frame. From the chart, we can see that instrument is forming lower lows and lower highs. This means that the cryptocurrency is currently in a downtrend. Now, the same as with our previous examples, you will notice a lot more signals than on the higher time frames. For this reason, it is important that we need to follow the exact rules that we've covered in this video. So firstly, we are waiting for a sell signal from our pullback factor indicator. After this, we are waiting for a bearish alert from the two-legged pullback indicator. Once we receive the second alert, we can take a look at the volume force pro. From the bottom panel of the chart, we can see the histogram below zero and also below the average line. All of this means is we can enter our sell trade. For the sell trade, I will place my stop loss above the recent swing and aim for double the return. To wrap up, applying the pullback trading strategy to different markets requires keen observation and adherence to the established rules. Despite increased signal frequency on lower time frames, maintaining discipline and following the outlined criteria remains paramount to success. With a clear understanding of the entry and exit rules, you can confidently navigate the markets and optimize your trading outcomes. So if you haven't already, we invite you to visit our website and explore some of our fantastic promotions. The one that stands out above the rest is our TV Champ membership. With the TV Champ membership, you'll gain access to all of the indicators featured in this video, plus multiple other next-gen indicators. So I hope that you found this video helpful. Until next time, happy trading. Bye.